The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Martin Mignot. Martin is a partner at Index Ventures, one of Europe's leading VC firms. Martin focuses on startups which operate in large markets through the development of must-have products that get exponentially better with each additional user. He focuses on food, transportation, finance, and healthcare. He has worked with companies including Bird and BlaBlaCar and serves on the board of directors of Deliveroo, Revolut, and Trainline. Prior to joining Index, Martin was in the TMT team at UBS Investment Bank and co-founded the beauty subscription business Boudoir Prive, which was acquired by Birchbox. If you enjoyed today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Martin Mignot. Martin, welcome to Rebank.
Hi, Will.
Thanks for joining us. It's good to connect. So it was our mutual friend Aman Guy of Finch, who put us in touch. Good guy. We'll have to get him back on the show at some point. Maybe we can do a round table.
Absolutely.
Group chat about something. Cool. So you were telling me before we started recording that you just got back from a trip to China. Tell me a bit about that. What were your thoughts?
Yeah, absolutely. So I just spent 12 days traveling around China. It was my first time in mainland China. I'd been to Hong Kong a few times. Beijing, Shanghai, Shenzhen, and meeting a lot of VCs, a lot of local companies. And I came back with kind of two thoughts. The first one, at two different levels. So the first one is on the micro level, and I was incredibly impressed, as I think everyone is coming back from China, with the quality of the companies, of the product, of the people, of the talent, the work ethics. A lot of things are very similar to the West. The fact that you can use Didi, which is like Uber, you can use Ofo, which is there as well. You can use WeChat, which is not that different from WhatsApp. Actually, it's just better, as everyone knows. But there's a lot of similarities, and at the same time, there are a bunch of very specific themes and sectors where China is ahead. AI is one, electric is another one. A lot of e-commerce, mobile payment, they're ahead. So it's pretty fascinating on the micro level, and I think there are some great companies and great entrepreneurs there. On the macro level, though, I think it's a little bit more of a mixed picture, and I felt like people were getting a bit worried. Obviously, there's the tariff question, but I think there's just also more broadly, the country has gone through 30 years of very fast growth, but also 10 years of very fast monetary creation and credit increase in the overall economy, especially onshore, and a bit of a disconnect between the offshore RMB and the onshore RMB, where you have now very, very large monetary supply. And it can create a lot of tension. So I think the government is a little bit of a tough situation where they have to decide, okay, do we want to deleverage and go back to something a bit more reasonable, which will mean lower growth and some painful adjustments for sure, or do we just keep going? But the question is until when? And at some point, there are going to be questions around inflation. You see already, the real estate is extremely expensive. Startups in tech companies are extremely expensive as well. That may be related. And I think eventually people will be wondering whether they should keep their local assets in local currency or maybe they will try to take it out of the country, and that may create some challenges. So I thought that overall macro picture was not great and a little bit worrying, to be frank.
Do you guys as Index invest in Asia or in China specifically?
No, we don't. I mean, unfortunately, we've clearly missed an incredible amount of value creation and some great companies. And so that was one of the reasons for the trip, just kind of trying to understand a bit better, getting knowledge and just trying to understand if we wanted to do something there. And yeah, again, I'm convinced there are going to be incredible companies being built there. And the question is, one, can you invest in them? How easy it is to do it? And then two is the current timing the right one? Which, on the early stage side is not that much of an issue usually, because, we are a little bit acyclical, I would say. On over a 10-year horizon, who knows where the cycle will be by the time the companies are ready to exit. But on the growth stage side, it's a little bit, it's a little bit different. I mean, valuation, entry valuation, and exit valuation are more important and more sensitive to the cycle a little bit. And also, I think in this particular case, the uncertainty I feel like around what's going to happen with the economy is so high, at least in my perception, that it kind of supersedes a little bit the quality of the underlying assets and entrepreneurs. I mean, that's where I stand right now. But let's see how it develops.
Yeah. Are there learnings for European companies, U.S. companies, investors from a trip like that in China, or is the market just fundamentally different?
No, I think as I said, I think there's a lot of things look very similar. They have travel OTAs, and they have Uber-like company, and they have Meituan, which is like Deliveroo, and so you have a lot of these. Because at the end of the day, the consumer is the same. I mean, the consumer needs are the same. If people want to find housing and travel and try and move in their city and get food and get and pay with their mobile, and so all of these needs are the same. But you just have different companies addressing them. It's different names on your iPhone, but they're still they're using iPhone as well. So even the underlying device and tech infrastructure is very similar. So it's quite similar, and there's definitely something to learn. I think to me, there are a bunch of themes which were quite interesting. So one is what they call the new retail place, so where they kind of merge offline and online. I thought that's an interesting trend when you see what they can do with merging kind of grocery shopping with Deliveroo type experience, where you can get your grocery delivered and your meal delivered freshly cooked in less than half an hour wherever you are in Shanghai. You can literally, I saw it. You have live fish in an aquarium, and then they just take it. They kill it, they cook it, and then they send it to you. And they also send you, the bread you need and your cereals and your noodles and whatnot. Right? So it's quite, and all from an app and all in less than half an hour. So that's quite interesting. And there are a lot of really cool stuff that they do around that. I think electric is a very, very big theme. It's a big theme everywhere, obviously, in electric vehicles. But the difference there is that obviously, pollution is quite an important topic politically and environment, and even on health based there. I mean, it's the first. I think that's the first thing that kind of shocks you when you land in Beijing. It was 42 degrees. I mean, it was so thick, with pollution, I couldn't see the hotel next door, even though everyone was telling me it was a great day. So, that's the first thing that you realize. And then when you talk to people, a lot of them are like, yeah, after a while, I had to move out of Beijing because it was just too harsh. And so clearly for them, finding a solution to that is, it's not something in the potential catastrophe in 50 years' time. It's a practical problem today, and I think that changes the political will quite a bit. And they've put some harsh limit on that on one hand, and on the other hand, local investors, VCs in particular, but not only, have been investing massive amounts into electric vehicle companies. So one of them just got public this week, called the NIU, which is supposedly the local Tesla. It's quite a bit behind, but they just raised $1 billion on the New York Stock Exchange, and that's just one of hundreds of electric vehicle companies. The other thing is all the mopeds and two-wheelers are all electric. Basically it's banned to have petrol scooters or mopeds inside in the main cities, and so it's actually much more much quieter than here, quite surprisingly, and there are quite a bunch of pretty advanced companies, more advanced than in the West. I mean, it's just much more mainstream. So it feels like that's one area where the next generation of OEMs, a bunch of them, most likely, will be Chinese. And there are a few other themes that are quite specific.
Yeah, well, interesting. Maybe we'll get into more of it as we go. But you mentioned some of kind of these more or less basic human needs that are kind of shared across geographies, and one certainly which we talk about a lot on this podcast is banking, money, financial services, and so you guys are invested in Revolut, and I think you're on the board, right?
Yeah, I am on the board. Yeah. And many other fintechs.
Of course.
To give some background, maybe some background on Index. I think we've invested. Definitely. So we invested 10 years ago in fintech. I think before the name was even had even been coined. I think the first investment was Climate Corporation, which was weather insurance based on big data that got acquired by Monsanto. And since then, I think we've invested almost $500 million in fintech. We're one of the most active fintech investors in the world, probably. And and Revolut is one of many, but we've really invested across pretty much every vertical and every product line, whether it's FX obviously, but also lending, savings, investing, payment, a lot of payment, etc. etc.
Yeah. Any other names that you personally have been involved in?
No, so personally that's my only one. My focus. So I'm not a fintech expert. I'm more focused on consumers. So that I was talking about consumer needs. So my focus is B2C at large, and my thesis is very simple. I try to go for high repeat, high engagement product with going after very large markets and very large consumer spend. So and that's been food with Deliveroo, that's been finance with Revolut, that's been a lot of transportation investments. So I work with BlaBlaCar, with Trainline, with Bird, with one of my colleagues in the US. That's health. I'm on the board of a company called Cru, which is going to be called Levy here in the UK, which is a kind of a telemedicine product. So that's my very simple heuristic, and that's what kind of drew me to Revolut, was very much the consumer behavior, that frequency of usage, and the fact that they had managed to come up with a radically new and improved consumer proposition that could capture people's attention, which is the heartbeat in consumer.
Yeah. Well, actually, that's going to be a super interesting thing to kind of talk about, especially in this current moment in time when we're starting to see these quote unquote neobanks, challenger banks, digital banks. I guess both the neobank and the bank part are both in quotation marks, because not all of them are actually banks, but they're offering bank-like products, services. I think Revolut's in the process of applying for banking license in Europe. But so N26, I think I got an email just the other day saying oh, hey, you signed up to our mailing list a few years ago. We're about to launch in the UK. And I think Revolut maybe in 2026
they've been saying
also,
that for a few.
Well, they have been, right? And everyone's been talking about how they're going to expand to the US, and then they kind of seem to pull back, and then the US doesn't really know what it wants to do with fintech charters or not. But it does feel like we're kind of getting to the point where these guys are starting to kind of butt up against each other in terms of fighting for market positioning. And then I guess in the US it's even a bit more interesting, because maybe there hasn't been as much of a neobank push, but some of the incumbents, like JP Morgan specifically with Fin, its digital offering, are starting to stake a claim for that space. I mean, I guess maybe starting like a bit earlier from a Revolut standpoint. At what point did you guys get involved?
So we first invested in the seed round, and then we followed on in Series A. We led the Series B with a growth fund, and then we participated in the latest Series C round as well. And I joined the board at the Series B, but I've been working closely with them for quite a while now, almost since the beginning. So
has the vision changed over that period of time?
I mean, I think Nick would be the best position to answer. I mean, Nick and Vlad, I think that's very much his baby. But I don't think he really focuses on the vision as much as on the customer. I think he's obsessed by making the consumer happy and getting them the right service. And he started from a very obvious pain point, which was people were getting ripped off with FX fees when they were traveling, and that was the driving motivation. And then using that, he's been expanding that to other pain points. But he didn't say, okay, we're gonna start from that and build a bank. He said that's one pain point. What are the other pain points we can start to alleviate, and where the service is really not that good, and that's what they've been working on since then. But the whole question around neobanks and the race between them and the competition between them, I think it's great for newspapers and the media. It's people always like a good fight, but the reality is that the market is still massively dominated by the incumbent. Both in absolute term and even in kind of absolute growth numbers. You look at the App Store, the top 10 slots are typically still kind of owned by the incumbent. So I think, obviously in relative term, Monzo and Revolut and N26 are growing much faster than these guys. But in absolute terms, they're still, kind of nowhere to be seen. So I think the competition is really with the incumbents as a whole rather than between themselves for now, at least.
Yeah. I mean, I totally get that, and I think I agree with that. Like over maybe the medium term, but at the same time, there's this question of like, is there a finite pool of early adopters, and like, is the fight actually for those customers initially, and it's like gonna take a bit of time to work through to the mainstream customer, and I don't know. If trust and brand recognition are important, like is it key to kind of be the first mover at scale in this space?
Yeah, I think it's two things. One is that what we liked about Revolut, among many things, is one that because they were so clearly focused on a very obvious pain point. That pain point is not limited to millennial. I mean, anyone who travels, it doesn't matter how old you are, is experiences this pain point and understands the pain point, and that's a great way to solve it. And so, it is, and I think it's a very mainstream message, rather than saying, "Oh, we're going to replace your bank," which that I agree. Is great when you don't have a bank account and you start from scratch. That then that makes sense. If you have been with the same bank for 20, 30, 40 years, that's a tougher sell. Typically, because I think typically people are not that unhappy with their bank, or even if they are unhappy, the hassle of switching is just so high, and just got used to it. So I think that's what we like. It was a nice wedge into the market, and then the question at the end is what is the structure of the market? Is it a natural monopoly? Is it a natural oligopoly? Is there no barriers to entry? So there are going to be like 2,000 people. I think the reality is like it suits itself to probably an oligopoly, which has been the case historically. It's hopefully going to be a more open oligopoly for consumer sake than it has been in the past. I think that's what the regulator is trying really hard, especially in the UK, to do is to really lower the barriers to entry. And allowing new entrants to use the existing guys' infrastructure and play with much lower resources, just enter the market. Having said that, One, there is, given the weight of regulation, given the capital needs, and also given the brand power. I mean, it is a trust business at the end of the day. I don't think it suits itself for hundreds of thousands of companies and a lot of small players competing. I do think there is going to be a few, and again, if you talk about Europe, clearly there are three major actors, which are emerging, which are the one that you're naming. I mean, yes, there are a few other, but I would say those three, because they've raised more capital, because they've grown faster, because their product offering is just more advanced, seem to be emerging as the next gen. And then there are probably going to be others, but I think in that category, clearly, naturally, you've got people who kind of attract the capital and the talent at a faster speed than the rest of the market, and those will be the next, the next leaders in that space.
Yeah, I guess. Well, another question I'd be interested in getting your view on. I guess everyone probably has their own take on this. I'd be interested in yours, given where you sit. But the whole question of like, who will end up owning the customer interface when it comes to banking? Does it end up being a digital bank? Does it end up being like some dashboard like interface offered by a Google or Facebook, or I don't know? Does it remain with traditional banks?
I think it's the people with it gets back to my investment focus, which is those are the people with the highest frequency. Those are the ones that will build the most valuable brand, and those are the ones that will command the higher multiple, and eventually dominate the most products. And I think those are the consumer payment companies, because you interact with your Revolut app multiple times a day, and there is no one that comes even close to that, and that's been their huge advantage. So I do think they will be dominant actors. Having said that, there are also a bunch of products where you have much more infrequent usage, but more specific use case, more niche. I don't know, if you want to invest and get a certain return for a certain amount of risk. There may be products like, say, Funding Circle, which is another of our companies, where you're not going to go on and log on to. I mean, I'm sure some people do, but you won't necessarily go there every day or multiple times a day. But when you want to invest your money, then you will go there once a month or maybe a couple of times a month, and they will offer you something that you can't really get anywhere else. And it doesn't and because it's infrequent, it doesn't really it doesn't have to be linked to or within a Revolut type interface, because you don't need to kind of check it 10 times a day, and because you're going to have some certain niche needs are going to be covered that it's not that niche actually when you see the size of Funding Circle, but I mean less not daily needs, and then may apply more to a specific population. So I don't think those things are totally exclusive, but at the end of the day, I still do think that the very, very large mega players are going to be the one with that frequency of interaction, and I do think there will be specialist fintech players because of the regulation, which are very heavy on multiple levels, and which I don't think the major tech players want to deal with, frankly.
I want to switch gears a little bit, staying within your kind of investment thesis, your personal investment thesis that you outlined before, but and kind of like think a little bit about the whole the changing dynamic of a lot of urban environments. I think there's some statistics, expectations that by something like 2030, like 60% of the world will live in urban environments, and so you're also on the board of Deliveroo, and you mentioned you're kind of work closely with Bird, the electric scooter company, which kind of all the rage on the west coast of the US. I mean, and
soon in Europe.
Yeah.
Well, it started in Paris, and soon, hopefully, many more cities. Let's see what happens in the UK.
After we finish recording, we're going to go play with the electric bike that you rode over here on.
Absolutely, cowboy.
All right. So I guess like first question, this is just kind of pure curiosity, but so Bird, right? It's like they're physical pieces of equipment. It's like this, kind of rental model. Presumably to scale, you basically need to produce tons of these things, like set them up. There's like this ongoing, I don't know, maintenance or like human component. Yeah. I'm sure there's a technology component as well. I mean, is that an obvious VC play?
No, I think that's the short answer. Even though they've raised from a lot of different VCs, so
I assume personally they're just VCs that like riding their scooters.
Yeah, we do love those scooters, but I'd say what's the reason why VCs invested, even though it's not a pure software element, is I think the main one is the velocity, which is the pace of growth, and that makes it to me a VC investment, because when you have companies that are growing 10x year on year or more, in their case actually, it means that you can first you can have you can create a size of company that justifies the initial investments, and you can get there quickly enough to work within a VC time frame. I think the main challenge with VCs is not necessarily the amount of capital that it takes to get somewhere, although obviously that reduces return, but it's more the time it takes. I think a lot of, especially in the physical world, the issue very often is that it just takes time. The beauty with Bird is that there's a regulation element, which is a huge component, and you need to source the scooters. But then once you have that, and once you get the capital, if you can prove the economics, you can finance those scooters quite easily. And then it's a matter of building the density, and that creates a natural network effect. So you end up with a business where the financing is on one part, so you can variabilize a lot of that. And on the other side, you have very strong network effect based on the density, and then obviously on top of that, based on the quality of the product, and also because there is a technological element, which is both on the hardware side. So there is going to be a strong innovation. It's still a new vehicle, so it is a new product. And on the digital side, where around safety, around where you park the scooters, around the charger network, that's the other element. So there's and the other element is. So there are two network effects. One is the scale, the density. So the bigger you are, the better your service. And the second element is what's very innovative with Bird is that they've created and came up with this idea of having a kind of outsourced charging network, which is like you would say gig economy, but freelancer network of people who pick up the Birds and repair them and charge them overnight, and that's totally outsourced, and which allows them again to launch a city without any need for any physical infrastructure except for the Birds themselves, which again are actually financed. Today it's still financed by them, but then at some point, if you can prove that the economics work, then you will have a lot of it's just going to be a capital financing game.
No, I think the other important network effect is the more people riding around on the scooters, the less goofy it
looks. That's a very good point.
That's to be the most important.
Yeah, and that was the same. I don't know if you remember, but we had it's actually it's one of my theme as well, which more and more because it's getting harder for consumer companies, especially to get heard in the noise, and cost of acquisition on Facebook and Google are getting so high on most keywords and most topics that having a physical presence has become an incredible advantage. And we've seen that with Deliveroo, and I don't know if people remember, but when they got started in London, there were a lot of people were up in arms. Like, who are these guys with these goofy outfits and riding around and making noise or whatever? I mean, there was the first reaction was a bit of rejection, which actually turned out to be a good marketing in many respects. And Deliveroo had the same thing. The bigger they grew, the more riders they had with people wearing the Deliveroo outfits.
It's a bit intimidating sometimes, and they're like lined up and they're like biker gear and full helmets like outside the restaurant that you're trying.
They're trying to address that, but they're very nice usually. So you should go. You should feel free to feel safe.
No, well, I mean this. like kind of gets in that broader theme, which we.
But by the way, just sorry, just one last point on the physical side. It's also something that's worked really well in finance, right? Where the Monzo card and the Revolut card. I mean, again, that's another one where you had the physical and the digital, and having a physical product actually helped them grow quite significantly.
Yeah,
it's hard to measure, but
I was talking to a buddy of mine who works for Uber Eats, and he was saying that there's like a bit of planning around, like you've got restaurants now that are like building themselves with dedicated like delivery driver pickup points.
Yeah.
And I was asking the proprietor of our favorite Indian restaurant in Hampstead, like why we couldn't, order the food on, Deliveroo, and he just doesn't have a service entrance, and he prefers not to disrupt the customer experience, so doesn't do it. But it feels like a small thing, but it's a part perhaps of this larger trend around how cities are changing, how people are kind of gearing up for some of these changes. And read an article that you contributed to that basically talked about how cities had the opportunity to kind of at this present moment capitalize on this transformation. So you've got everything from self-driving cars arguably in the pipeline to other things which are just changing, like traffic flows and human flows and rent demand and all this stuff, and like taking that on the front foot versus the back foot. Apart from like Deliveroo and some of the companies that you guys are already invested in, where else do you see that kind of theme playing
so
out?
I'll say two things. The first one, I'd just like to go back to your Deliveroo story with your Indian restaurant. I think it's very interesting. I mean, and the impact is it is on multiple fronts. So one is some of them design specific spaces. You even have restaurants that are exclusively what we call virtual restaurant. I actually invested personally in a chain of those, which and the thesis is when we built the highway around the car in the 50s. That's when the fast food industry really grew, because suddenly you had the distribution and you could have these kind of standardized units all over the country, and you had this flow and access, very very easy access to people who had to eat fast. The new infrastructure is digital, and it's this network of riders, and so Deliveroo and Uber Eats and the others. All the new highways, and so there are going to be chains. The new McDonald's and the next McDonald's is going to be a restaurant fast food built exclusively on top of these platforms, because everything will be optimized for delivery, and the capex will be much lower. They can experiment more, and they will be very savvy around kind of online marketing, and much more than a normal restaurant. So because they will be entirely focused on delivery, they'll just beat the other players, and they will be the next brand. So that's the thesis, which I think is quite interesting.
Well, this whole concept kind of makes me laugh, and it makes me think about the K-Bell Hut, which no doubt reveals my humble Midwestern roots. But this like single restaurant that was a KFC and a Taco Bell and a Pizza Hut, like all together. All owned by whatever.
There used to be one like that in London called Deliverance, but I think they went bust after Deliveroo came in.
And so now you have these, basically like virtual restaurants. It's like Korean barbecue, and it's a burger joint, and
exactly, Although my thesis and what I hope the one I invested in is called Taster, and today they do have 3 concepts. My hope is that eventually there's one that really really works, and the good thing is that you can try. You try 3 concepts, and then you very soon see which one is there one that has more pull, and then you can focus entirely on that, and really, and the beauty is like then you can really scale that. You can use either Deliveroo's infrastructure, the Editions network, or you can just rent some cheap kitchen anywhere in the city, and then really and globally, because these players, Deliveroo, Birds, they are everywhere. That's the beauty. It's not even national anymore. You can really go global very very fast using these guys' infrastructure. And the other aspect I would say, so that's going to the extreme. But even if you talk to restaurant owners now, if you want to open a new restaurant, and you go to your bank, going back to finance, they will ask you to sign up to, Deliveroo or Uber Eats, depending on who is stronger in which city, and because for them it's a guarantee, that's a guarantee of cash flow. And they will, if you are an existing restaurant, they will look at your cash flow. But if you're a new restaurant, you will have to go onto one of these platforms. So they've impacted this sector quite a bit. So that was a long comment on your story. Going back to the change in the city, I think there's something interesting happening, which is quite similar to, in a funny way, to what happened to the banking industry, where you had this whole kind of unbundling phenomenon happening, where you used to have one place where you go to, and that does everything for you, your mortgage and your student loan and your cards and your payment and everything you need, but don't do it really well. It's not really perfect for any of that, but that's the only way, because of distribution cost. The same thing is happening with the individual car. And it used to be that you had the car that would go from A to B, regardless of where that A and that B were, and the distance between the two of them, whether it was 2 kilometers or 200 kilometers or 2,000 kilometers, you took your car. Well, I think that's changing, especially on in dense city areas. For any trip that's below 20 kilometers, my thesis is that eventually 80% of those won't be made. I mean, there is always going to be some that needs to be done by car, and if you're older, you have baby or whatever, but the rest is going to be done by light electric vehicles, and depending on, and basically there's an analyst that called Horace Didiu, used to be focused on Apple and is now focused on micromobility, and his thesis, I quote him, is to say that the shorter the distance of your trip, the lighter the vehicle that you should be using. So, if you go, for 500 meters, you could use your body. It's not, depending how light it is, but hopefully it will be lighter after your trip. But, and then after that, you can use electric scooter, and a bit further, you can use a bike, a bit further, 5 to 15K, 20K, you can use an electric bike. And they're all fit for purpose for that particular distance. And that's especially true now that two things have happened. One is cost of batteries have come down massively, and still are. So it's become possible to put these small batteries in many more vehicles that it wasn't possible before. And then now everyone has a smartphone, which means a GPS, which means it's possible to unlock these things and locate them and use them without owning them. So those two things together, I think, will totally radically transform how cities are kind of operating. And I think that segment of less than 20 kilometers is probably the same size as the car segment today, or the segment above that in terms of dollars, and it's going to create some ginormous companies. Bird is going to be one of them, I hope, and but I'm pretty convinced about it. But I think there are going to be a few others. So as you mentioned, I invested in this electric bike company because I think some people will still want to own their vehicle, and there is going to be some premium brands being created in that segment. But I think that's going to be one of the most significant transformation in the way cities operate, and they have to get on board. I mean, some of them have been, and they've realized that the best way to deal with these new entrants was to set some clear rules. Don't drive on sidewalks, don't park them in stupid places, that kind of thing. But otherwise, go for it. And some other cities have been just much more heavy-handed and say, cities are for cars, and we don't want anything else. Which it just, to me, is both kind of very strange, because scooters are solving a lot of issues around congestion and pollution. They offer a great service in a way that transportation is not only about the transportation. It's not only about that. It's an infrastructure play. So what it means is that the better your transportation network, the more options you have, the faster people can move around, the more meetings they can have, the more productive they can be, the more fun they can have, the more experience they can live, the less time they have to spend stuck in their car, and so on and so forth. And so it has a benefit that just goes way beyond that. And capping or banning some of these options that people want just because they don't necessarily fit with the current infrastructure, which is built entirely around cars. Not everywhere, but in most cities, especially in the US and some European cities, it feels like it's the wrong approach.
That makes me think of stories that a buddy of mine who is based in Asia tells about how basically like business trips to Jakarta, it's like one meeting a day, max two, because you're just stuck in traffic for like hours and hours and hours. So like if you can move quickly, suddenly like to your point about the velocity of growth, it just totally changes the equation.
Yeah, I mean because economy is all about transaction, it's all about exchange, and why cities have been so successful is that it's a great place to exchange a lot, whether it's goods or ideas or data or whatever you want it to be, and the more fluid you can make that, the happier people tend to be, and the stronger your economy, and just the more efficient your people's life is. And so I think that's an area where Europe obviously has, I believe, a very strong advantage. And I think Europe is going to be the best market for companies like Bird, because of the density of these cities, which means that the cost of a scooter is going to be the same everywhere. The disposable income is a bit higher in the US, but not massively so. But the utilization of a single vehicle is going to be multiples of what you can have in the US, simply because you have more people per square meter or square kilometer in European cities. So I think it's going to be a great place.
How long before self-driving cars are a thing, and that's what you're summoning from your phone?
Yeah, so we've invested in this company called Aurora in the US, which is a self-driving car software company, started by a really strong team of ex Waymo, ex Tesla, and I think their view is probably around 5 years. I mean that's what they told us when they came to pitch. So I hope it's not like the Crossrail. They don't expand their budget and their deadline too much. But I think that's what people say. But 5 years means they have no idea. I mean that's a little bit my read. So it could be 3, could be 8. Who knows? But I think people upset. I think that's my other thing. I do think it's going to be huge and it's going to have a massive impact. But I feel like people are obsessed about self-driving cars and take scooters and e-bikes as a bit of a joke, or a bit of. It's like some people take it as a bit of an annoyance. Some people see it as just like a fun things to move around. My view is that it's going to have as much impact, if not more, than self-driving cars, because that's going to really change the fabric of the city. And it's and also it's here now. It's not some hypothetical thing. And also I just don't think cars are well suited for cities. It's just they are too big, they are too heavy, they take too much space. They're not efficient to move people around in a dense environment. They're great if you live maybe in Phoenix, Arizona, or in the countryside for sure. And they've been fantastic for humanity in general. I mean, I don't have anything against cars. I just don't think in a dense urban environment, which city is getting denser and denser, it's just not going to work. I mean, you can't, that's not, and the fact that they are self-driving or not self-driving is not going to solve the congestion problem.
Yeah. Well, I mean, London's a great example of that even now. I'm sure, tons of other densely populated urban environments, but it takes during pretty much any time during the day, like a good 45 minutes to get from the city to the West End, and during rush hour even longer. And of course,
the average speed in the center of London is 5 miles an hour. Wow. I mean, that's getting
crazy.
Which is
Martin, we could keep going, and I feel like we actually should sometime in like a round 2, maybe a group chat. We can get Aman and some other people involved.
Yeah, absolutely. I'm always up for it.
Excellent. So in the meantime, how can people find out more about you, the work you're doing, and Index more broadly?
Yes, you can, obviously we got an Index website, but I spend quite a bit of time on Twitter, at Martin Mignot, first name, last name. And I tweet a lot about Revolut, about banking, a lot about transportation. and just kind of the new consumer trends. So just come and banter there.
Excellent. Martin Mignot, thank you very much for joining us today.
Thanks, it was good.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.